a false break. Now this one is the important one, and this is the one that you will be using in your trading in the future with money. And if you'll master the false breaks, this will make you very, very happy and perhaps very wealthy as well. Now, what is a false break? The terminology is as follows. The false break is the break that is made by a bigger player, by a bank, by a hedge fund, or by a big day trader to gather a position, so to gather his trade and to kick out other smaller traders, in this way helping him then follow his trade that he was initially creating and gathering. And it is also an inability of the price to move higher than the previous high or lower than the previous low. This is the terminology that you should write down and you should learn. This is the concept pretty much of the false break. But in the simple words, the false break is a trap. Now you have to understand the concept in the market view in a way that the false break is created by a larger player who is trying to manipulate the market in moving in his favor. Now imagine that you are a huge player. Now as a small day trader, you trade 1 contract, 5 contracts. Even myself, even though I've been making quite a lot of money, I was still trading 5 contracts, 10 contracts, 20 contracts at the most. And these kinds of numbers, I mean the European market, the Russian market, when I'm trading a shitload of contracts just because the trading happens in rubles and it's quite a different math in there. But when you're trading US market, European market, or Asian market, you'll be mostly trading with 1 contract, 2 contracts, 5 contracts, 10 at the most. And these kinds of numbers, you will never move the market. And your depot is, even if it's at around a few 100,000 or even 1 million, you would still not move the market very much. So you can open a trade with 1 click with just 1 order, which would be of 10 contracts, and that would have no effect on the market whatsoever. But now you imagine that you are a hedge fund or you are a bank or whoever, and you have a depot of 500 million or 1 billion or 2 billion, does not matter, and you're trading thousands of contracts. And this is something that if you would have clicked with 1 order, you would have just moved the market so much, so quickly, and you would not profit from that. You would actually lose. And it is quite difficult to trade with huge amount of money. So what do those traders need to do? They need to gather the position slowly, and they need to then later manipulate people into believing in that move and help them move the market in the direction that they wanted. And a lot of times these big players, they use a false break to generate the initial impulse in the direction that they wanted. So imagine that a big player is in a short position. So he's gathering a short position and he would benefit from the move down, not up. And what would happen is when he's gathering a position, he would create a level, the key level himself. And that would actually be visible, but that we'll talk about in the lesson about the traces of a big player. Now this player, in this kind of a situation, this level would be called the limit level. And we'll talk about it, of course, a little bit later as well. But he would create that level and he would show the people that there is money at that level. And if we break the level, then the prices are very likely to keep climbing. So there are going to be a lot of people entering into climbing prices, so opening the long positions, and that would generate a small impulse of going up. But then this player, what he wants to do is he wants to actually screw up those traders by moving even more powerfully the market down again below the level, which again will be the false break. So in the beginning it looked like a break, and then it turned out to be a false break. And so in this kind of a situation, there will be 2 types of people generating the move in the market. There are going to be the people who will be closing their long positions, so generating the move down from that because they will be selling off. and the stuff that they bought when they believed in the true break and they believed that the price will be climbing, they will be selling off those positions, those contracts, stocks, or whatever you're trading. They will be selling that product off. Second reason why there will be a nice move down is because of the false break traders like me and perhaps like you quite soon, because we will see that this is a false break and we will be opening a short position, meaning that we would be selling something. So the long position traders will be selling and the short position traders will be selling as well. So in that precise position, a lot of people, a lot of traders will be going into a short position for two different reasons. But nevertheless, there will be a lot of money going into short positions. And this would perhaps generate a really nice impulse of going down. And this is something that our big player wanted from the very beginning. And so this is the reason why that big player created the false break, and this is the reason why the market actually moved down. Remember, there is no magic in the market. It's only math and trading. And this is human psychology and human logic. People get scared of something, they'll leave the trade, or they have a technical reason to leave the trade, they'll leave the trade, then they have a reason to open the trade in whatever direction. And this is what moves the market. If the most people go into climbing, then the prices will climb because a lot of people are buying, so the demand is growing. That means that the market is going up. If a lot of people are shorting, meaning they're selling, that means that more people are selling than the people are buying. That means that the price is going down. This is just like at a bazaar. If there is, 3 watermelons and 1,000 people come to buy those watermelons, what's going to happen to the price of these watermelons? They're going to increase because there are not enough watermelons for everybody. And the same thing goes for if you have 1,000 watermelons and 3 people at the bazaar. What's going to happen? The price is going to go down because you want to sell at least something. And the same simple logic works in the financial markets. The financial market is no different from a food market, quite honestly. It's funny, and if you understand how the market moves and the logic of even the big player and the logic of a false break, you will be very well off quite soon. So yes, in general, the false break is quite often used to cheat other traders. And if you're gonna be the trader who knows this and who is able to identify those spots, oh my God, you're gonna be quite happy with the result. And plus, if you will incorporate the indicators and a few other tools that I'll teach you, you're gonna have a lot of fun making money. All right, so let me show you a false break. Now, as you can remember, this position, this place in the market right here in the daily chart, and I think we've spoken about it before. But once again, let's mark our level. So, and one more thing, one important thing, almost every powerful move ends with a false break. And that means that it is quite easy to identify where the market is coming to a stop or a potential trend break and a reverse in the move. So as we can see here, we have an incredibly powerful move. And then this is the last candle where the move is working and the price is climbing. And here, this is our CCL, the candle that created a level. And let's mark it. And this is the false break in regards to this level. Remember that the false break can be only correlating with some level or with some candle that created a level. The false break cannot be just a false break out of nothing because it needs to break something and then be a false break of that something. Sounds quite confusing, but it's quite important to understand. Now here, the false break could also be, as you can see here, that the candle after the false break is our candle that created a level, but it could also be the other way around, as for example, as we can see here, that, let's mark it, the same idea, a powerful move going down and then a false break. So here we have a low, and here the price was unable to move lower. So first comes the CCL and then a false break. But here we have first a false break and then a CCL. So it does not matter which one comes first, the CCL or the false break, or the false break and then the CCL, the candle that created a level. Now, all right, let's remove the bottom one. It's irrelevant for the sake of the example. And as you can see, there are quite a few other reasons why this level is great, but those we will talk about a bit later. Now here we have the first false break, and this was the initial one that created the level, which helped create the level. And here, this is the next one. And then there is another false break, and then there is another false break, and then there is another powerful false break. Now, as you can see, this level has quite a few false breaks. Now, absolutely each of these false breaks, except the first one, is tradable. And remember that it might not look like very much here, but remember that this is a daily chart, and this is a really powerful and important daily level. We would still be trading it with the 5-minute chart, though even the 1-minute chart, the 15-minute chart. So these breaks, these false breaks will look quite huge and quite visible, and the structures are going to be very nice, and so on and so forth. As you can see here, the last false break after which the market tried to move down, but now it's actually still in the air and trying to decide what to do to try to break the level again or actually move down. We'll see what happens. I have no idea just yet. Now, as an example here, as you can see, this false break was around 150 points. And you might say, well, but this is a break. And no, it's not. Let's see how it looks like in the hourly chart. The 5-minute chart is quite difficult to show you. I will just be scrolling back and forth. But I'll show you, of course, many more examples of how to do that a little bit later. But for the time being, let's take a look at the false breaks, how they look like in the hourly chart compared to the daily chart. Because as I've said, there is not much to see here besides the level itself. But the hourly chart, which is a lot smaller, it's a huge lens for the daily chart. And let's see what those false breaks look like. And here is the first false break, and it is this one here. And see the way it looks like in the hourly chart. And this was very nicely tradable. Entry would have been the PTE, the point of entry would have been around this candle. Well, any of these candles actually, because the false break began here, and then maybe would have been stopped out once, but then the next entry would have been quite a really nice one, and this entry could have given us around 100 points, but we would still take less because we would be working with the 1-to-3 ratio, which we will talk about later, so don't worry about that just yet. Now the next one, and look, I love to see these. This is the, and so is this one. These are the CSLs, the candles that that support the level and confirm the level. We have just one here in the daily chart, but the CSL, remember that CSL can also be in a smaller time frame. It still is confirming it very much. Now you can see here one, and then there is another one, and this works like magic. This is the reason why I say that key levels are working like magic. And this, in my opinion, is magic, that the market turned in an hourly chart right at this point. And so it did here. Now let's see our next break. And here is our next false break. It is a really small one, and I want you to write something down. The small tails, the really small false breaks, the smaller the tail, the theoretically and statistically, and it is true, there will be a lot more power in the move down than in a really huge false break. And this is, I found it to be quite very true, because when the false break is huge and going up many points, it is already losing quite a lot of power and a lot of fuel to actually make that huge false break. The smaller the false break, the more potential it has of actually moving from the level later on. So as you can see, this is a really small one and it moves quite nicely. And we would be very happy if we would have just entered here with a really small stop right here, and we would have taken a really nice profit. And here you would be able to take not 1-to-3 ratio, but 1-to-10. But that we'll talk about later. Now this is our next false break of this level. And here it's a little bit larger than this one, but it's also quite powerful of going back down again. And now these are simple false breaks. There are quite a few different false breaks. There is a simple one, the false break with 2 candles, and a complex false break. And these ones are the simple ones. And now the last one is the complex one. We have quite a few candles, and this is a complex false break. But as you can see, this is a really powerful false break. And usually these ones, they might tend to be, as I've said before, a little bit less powerful than these kinds of false breaks. But in this kind of a situation, in this case, it's actually more powerful. So anything in trading, all these statistics and predictions, they cannot and they never are 100% accurate. If they are 51% accurate, that's already a fantastic result. So keep that in mind. Let's see. So yeah, this is a complex false break. Our entry would have been around here, the PTE, the point of entry, with quite a long stop in this case, because we cannot use a technical one here. We would have to use a fixed one, which would be quite large, but that is absolutely fine. And as you can see, it works quite nicely. And around this position here, we would already take our profit. So these are the false breaks, and this is pretty much the idea of the false break. And we'll talk about it a lot more. So don't worry if you are a little bit fuzzy on the terminology so far. It is absolutely okay, but make sure that you study your notes and pay attention, and make sure if you don't understand something, re-watch each video and each lesson as many times as you would like, because these are the core concepts that you will be making money with if you pay attention right now. Alright, this lesson is coming to an end. Don't forget about the test. And once again, there is no homework in this lesson, just like in the lesson before. So enjoy some time off, because very soon you'll have a lot of homework. So it is coming, but for now, enjoy the time off, and I'll see you in the next lesson.